Does having private health actually save you money or actually save you tax? Well, today I'm going to answer that as I go through the tax implications of private health here in Australia. Hello everyone, my name is Ethan Rooshock, and today I'm going to be talking all about private health and in particular the tax implications of it. There's a bit of a false perception when it comes to private health and tax that everyone just assumes that you must be saving on tax if you have private health. But what I'm going to do is go through the reason why that isn't always the case, who it benefits most from a tax point of view, and how to weigh up some calculations if that's all you're considering. Now, of course, there is always more to these decisions than just tax. Private health is obviously a service. It is there to look after your health, and therefore that would normally be your main consideration. So if you're considering it for the health benefits, this may be just an added benefit if it's going to save you on tax. But as always, tax isn't the only reason to make a decision when it comes to money. So there are two main areas that we're going to cover, and it's going to be talking about the Medicare Levy Surcharge side of things and also the premium rebate side of things, as these are the two areas that affect you from a tax point of view. And as I go through some of these, you'll understand that there are some slight differences whether you're on hospital cover or extras cover. So let's start with the Medicare Levy Surcharge. And this is the main tax implication of private health. And first, to understand this, you need to understand, well, what is the Medicare Levy and what is the Medicare Levy Surcharge? So the Medicare Levy, nearly all Australians pay this. When you pay tax, you'll likely be paying the Medicare Levy. And the reason is, this is a levy that everyone pays, you can't avoid. There are some low income earners that can avoid it, as you'll see up here on the screen. But other than that, there's nothing else you can do. It doesn't matter if you've got private health or not, you will pay the Medicare Levy. So the Medicare Levy is 2% of your taxable income. So in essence, the tax tables that you'll normally see, you need to add another 2% for Medicare Levy when you're doing any type of calculations. So a lot of people refer to the 32.5% bracket, but really in essence, it becomes a 34.5% bracket. Now the Medicare Levy Surcharge is different, and this is where private health comes in. So the Medicare Levy Surcharge is for those on higher incomes. So as you'll see here, if you're earning over $90,000 as a single or $180,000 as a couple, and there are a few adjustments there depending on how many children you have, but you will pay the Medicare Levy Surcharge if you don't have appropriate private health hospital cover. Now, the Medicare Levy Surcharge varies as your income changes, but it starts at 1%. So at a real basic thing, you can start to do these calculations and go, okay, well, if I earn $100,000, I'm going to pay 1% of my taxable income as the Medicare Levy Surcharge. So I'm going to pay $1,000 in Medicare Levy Surcharge. Now, when I talk about taxable income, I'm talking about, in this essence, income for surcharge purposes. So that's what the ATO assesses those amounts off of. So you need to understand that. Go and have a look on the ATO website as to what that's made up of. But if you get a little bit confused, there are some different add backs, etc. to come up with that figure. Now, this is where private health can save you tax. So let's have a look at that example. So like we said, $100,000 of income, you're going to pay 1% of that, so you're going to pay $1,000 in Medicare Levy Surcharge. So you can easily assess that if you have the appropriate hospital cover, you'll pay $0 in Medicare Levy Surcharge. So your tax savings are $1,000. Now you obviously are now paying for private health. But you can weigh that up, is that some singles can get this hospital cover at a basic level for cheaper than the $1,000. So anything under that, you're actually saving overall, plus you've got the hospital private health cover. So this is where a lot of my clients or people in general will look at it and go, you know what, I'm going to pay X amount in Medicare Levy Surcharge. I can get private health for either that cost or something similar. And they go, well, I might as well take on the private health and get something for my money rather than just paying an extra tax. So that is the key area where private health can save you tax. Now, one thing to be aware of, it is apportioned over a number of days. So it goes on how many days did you have appropriate hospital cover. So if it's a full year, 365 days, for instance, if you only take it part year, then you may still be eligible to pay the Medicare Levy Surcharge for those days that you didn't have the appropriate private health cover. Now, the other side is not really necessarily a tax saving, but it does come into play in the tax system, and that's the premium rebates. So depending on your income level, and normally when you sign up to private health insurance, you will tick a box or click down drop-down menu to say what your estimated income is, because that will determine what level of rebate you're eligible for on your private health premium. So you have two options. You can either get these rebates ongoing, so they're going to reduce your premium as you go, or you can get no rebate, and then when you lodge your tax return, it'll be calculated what rebate should have you got, and then that will be processed through your return. So there's different tiers based on your income level, as you can see here. But what you need to understand, if you get this estimate wrong, and say you go, oh, I'm going to fall into tier 1, and you end up earning more than that, you may have what's called an excess private health rebate, and that will be an additional tax that you will pay when you lodge your return. Because in essence, you've received too much of this rebate. You weren't eligible for that much. You've been receiving reduced premiums, and therefore you've actually underpaid, and then you have to pay that back. So always make sure when you're looking at these and you're signing up for private health, make sure you do provide an accurate estimate of your income, because otherwise you don't want to end up where you're paying not enough and therefore you end up with this excess tax at the end. The same will happen in return, that if you do overestimate and your income comes in lower, you may get that additional rebate, or if you, for instance, don't claim any of the rebate and get it all back at the end, then you will get that. So it's just something to be aware of. There are some other things that may happen where a partner may be claiming this on behalf of their spouse if they're not lodging a tax return, etc. So it's just something else to be aware of. There are a couple other things that you need to be aware of when it comes to private health. There's the over 30 surcharge. That was a bit of a tongue twister to get out. But go to the ATO website, read more about that. But pretty much it's an extra surcharge when you're over 30 and you haven't taken up private health, that when you do take it up, it gets a little bit more complex. But that's just something else to be aware of. And as always, as I said at the start, there's more to these decisions than just tax. Private health is obviously a health insurance, and therefore you need to understand, do you actually need it? Or is it going to be very beneficial to you from a health point of view, even if it's not going to help you much from a tax point of view? Hope that video has been helpful. Remember, if you do need help with your tax return, get in touch with me. I'm happy to help out. And go and check out some of the other videos I got on my channel. Hit the like button, hit the subscribe button, and I'll talk to you again on the next video.